Do you think that there is a risk that the fractional reserve banking system obviously can only exist if people don't take their money out of the system? And, negative interest rates create an economic incentive for hoarding cash and just putting it in a safe deposit box or under the mattress. How far negative do rates have to go before there's a run on the banking system?
Yeah, I don't think it's going to happen with depositors directly, but it certainly could happen with corporations making that decision. And of course, if you start, I mean, we don't have a fractional reserve banking system. We have a credit system where the banks are required to keep a certain amount of reserves in case there is a run on the banks. That's what really exists right now. But the amount of money they're required to keep, like in America's case, is 10% of household deposits only, which is about 2% of the money supply. Now, if you then have the household sector deciding that if you have the corporations or the household sector deciding I'm not going to get negative, if the negative rates actually got passed through to the depositors, then they could easily demand more cash than the banks currently have, which would force the banks to go to the central bank to ask for loans of money and so on. It's a source of potential breakdown, and the difficult thing for banks is they actually need a decent margin, and they need also a decent volume of new debt. Now, the volume of new debt is dried up completely. The margin's being squeezed at the same time. So there could well be banks that look like they can't survive, and people then go and take their money out, and we have a crisis that way. And the ironic thing is, this is being done by people who are trying to make the financial system more stable.